Thanks for listening to Rental Karma On Air, where good renters deserve good credit. Check us out at rentalkarma.com, and that's spelled Kharma.
Everybody, now we're going to talk about student loans and how they get affected. Granted, this is not a factor that affects 100% of Americans, but it does affect maybe 30%. And it's important to understand how credit is affected by student loans. One of the things that I see regularly, almost daily, is someone that has their student loans in a credit report, but they'll actually show up not as one student loan, even though you're only paying one payment a month. They'll actually show up 7, 8, 10, 12 times. I had one earlier today that was 14 times on the report. And I explained, why is this an issue? Well, one, a healthy credit report has 4 or 5 open accounts, not 20, which is what this person had, because one, they had so many student loans showing up on the credit report. But if you think about it, when we go to college, we apply for student aid every semester. We don't get, like, when we start as a freshman, we won't get one big check for the next 4 years because, well, maybe not everybody's going to finish and they would be taken off with the money or whatever, right? So you get one loan every semester you apply through the FAFSA process. And when they do that and they issue that check, each one of those has a separate account number. Makes sense. But then when you graduate college, what ends up happening, even though you pay the bill once a month, you log in and it says, okay, your bill is $250, whatever it is. Even though you're only paying one payment, they actually spread that payment across all the open accounts that you have. Why is that a problem? Well, 2 things. One, it oversaturates your credit report with too many open accounts. Like I said, 4 or 5 open accounts is a good number. Well, if you have 14 student loans, rent, and a credit card, now all of a sudden you're up to 18 or 19 accounts, and any little one thing you do in life mathematically just doesn't make a big difference. It's like adding a pinch of salt to a big pot of chili and then claiming to be Gordon Ramsay's chef of the year, right? It just didn't make the difference. It was something else that really did. So what you can do is you can easily go through a process called student loan consolidation. You don't do it with a private company, you do it with the federal government. And all they're doing is simply merging those 14 account numbers into one. And that way it shows up once on your credit report. The other ones will get marked as closed, and you'll have this new one that's on there. But you're solving this problem of oversaturation. So, Wendy, I'm pretty sure you've seen this over the years here around Kharma, probably not your prior life as well, where you'll see somebody's student loans in their credit report, and it'll have multiple late payments across there, all tied to the student loans. The problem is if you don't have them consolidated, you get this one $250 payment that you make each month, and they spread that payment across all of the accounts, right? Well, if you have one 30-day late on this $250 payment, they'll give you a 30-day late on every one of those account numbers. The lady I had earlier had 14 account numbers. Truth be told, this happened to me 15 years ago. My credit score dropped over 200 points from one late payment of 30 days or $134, because this was back in the days when we wrote checks, and I think we went on vacation or something, and I just forgot to put the check in the mail, and lo and behold, boom, there it was. You came home and you had a 200+ point drop in your credit score. Okay. That's devastating. And getting that fixed is very difficult. Really, the only solution is you call the student loan company and explain to them what happened, see if they can resolve it, reverse it, or whatever. And if they can't, you're stuck with it. And that penalty is going to last you that 2 years, like we talked about earlier in the late payment penalties. You know, a 30-day late payment lasts for 2 years. Half of it goes away after 1 year, and after 2 years is down to nothing. Well, that's a long time to wait for missing one student loan payment. That's why it's so important to have them consolidated, have a smaller number of accounts on your report because of that. One question that I get when you go through a new consolidation, it is in fact going to drop your credit age for the short term, because you're taking this history that's been on the report and you're merging them, and it basically closes the older accounts, okay? And you've heard, don't close old accounts. This is true. However, you got to weigh the pros and the cons of this whole thing, okay? The risk of keeping them open is pretty scary, okay? It could be it can be a risk of keeping these things open to be catastrophic with one missed payment, okay? When you have to ask yourself, what is my timing on my goal? I'm trying to buy a house, okay? Am I trying to do it in the next 3 months, or am I trying to do it in the next year, year and a half? Because that gives you other time to balance things out. Now, remember also, when you're consolidating these things down to one, and if you do one more thing like add rent to your credit report or add your electric bill to your credit report, that can come and offset the balance of this new account showing up for the student loans being consolidated into one. So you really should just have a mentoring session with us at Real Kharma when that is the situation, so we can talk about the timing and what other impacts there can be to help you get to the number, which is your goal, which is 720. Today, I want to talk about a very sad thing. In our society, we have a thing called predatory lenders. You can look around every corner in your town and you can find one in some form or fashion or another. These things are the root of the evil in our society, I believe. And I think it's something that's very important for you and me and everyone else to learn how to stay the heck away from these places. Because it's the trigger for financial ruin that can last you for years, decades, if not longer. Simply avoiding these places at all costs is incredibly important to your success. What are predatory lenders? Wendy, give me your two favorites or least favorite.
Title loans and rent to own.
Title loans. Okay. Those are illegal in some states. I think about half of the country, it's illegal. It's a state by state thing. What is the title loan, Wendy?
It's basically where you take the title of your vehicle that's paid off, or in some rare situations, not paid off, and you put an additional loan on it. Sometimes for like 300 to 400% interest rates, depending on your states. But basically, you're risking your only mode of transportation for a very small loan that you're going to have insane interest payments on. You're going to have insane payback requirements. And if you don't pay it, they're going to take your car.
So, as an example, I own a car outright. Actually, next month, my car is going to be owned outright. It's paid off. My 4Runner, my son checked it, and it's still worth $17,000, even though it's paid off, because apparently my 4Runner holds its value. I could take my title to the title store and get a loan for, say, they're only going to approve me. They're not going to approve me for $17,000, right? They're only going to approve me for a portion of that, maybe $5,000. That's it. Okay. And this $5,000 can have an interest rate that's in the hundreds of percent. And if I can't pay it back, they have the right to come and repo my car and take my entire $17,000 value vehicle. Is this the mafia?
Pretty close.
This just sounds insanely immoral. It should be illegal. I guess that's why half the states have made it illegal. But the states that have it, that's what you're looking at. I don't even see how that even seems like a reasonable solution to anything.
It's like, I know desperation can lead to some desperate measures, but that's honestly, that's one of the worst that you can do in a time of need, because if you fall into further debt or further trouble, you've lost more than you can replace with that original debt that you just took out. You're really going to be up a creek.
Thank you, Wendy, for that example. Your second favorite was rent to own anything? Or is it primarily the furniture, rent to own furniture?
It started out with rent to own furniture. Honestly, the afterpay, pay installments, and honestly, I would even throw, just like afterpay things like, just make easy installment payments. Basically, all of that is one and the same thing. But no, mostly rental furniture, where you can buy a couch for about $3,000 when it's only worth about $1,700, really. And then you got to make payments on it. And if you don't make those payments, you can either lose the furniture, or actually, somebody I know, I didn't realize until a few days ago, they were telling me a story that they had gone to prison for not paying rental payment.
What?
Like rent to own furniture. Yeah, they had basically an entire apartment that was furnished with rent to own through one of those stores, and they didn't pay their payment, and they were sent to prison because they didn't pay those payments.
Holy cow, I've never heard that before. Wow.
Yeah, I heard that the other day. I was like, ooh, I cannot, but I cannot wait to tell you about that one, because that's about the worst I've ever heard.
Yeah. And those stores, they're somewhat legitimized from the perspective of where they're allowed to set up shop and have business, like right next to a grocery store, right? Or a strip mall. I mean, it literally legitimizes it to the point of it's okay to go get groceries, just don't get over and get a couch, right? And they put the sign on the
Mhm.
window, $25 a month for a TV or a payment on a sofa or whatever the heck it is. It's legitimized, but there is no fine print on that window sign. And you're not learning any of the downsides of what can happen to you here. Along with, my gosh, going to jail, that's unbelievable. Wow. I wonder what state had some crazy law that allowed that to happen. That's amazing. The other thing to think about, I'm a thrifty kind of guy. I like going to Goodwills and other secondhand consignment stores. Furniture consignment stores are good ones. But there's a lot of other places. Facebook Marketplace. You need a sofa? You can find a sofa for 10 cents on the dollar. It's in good shape, that somebody's happy to give you for $100 as it finds a new home. So, they got a new one. What are they doing with the old one? They either have to pick it up in the truck and take it down to Goodwill, or they can sell it for $100 on Facebook, right? Why not find a better home for something like that and keep yourself out of those situations? And remember, a lot of those things they sell in those stores, Wendy, are wants and not needs, right?
Exactly.
Game station players and all these other things that you see in there that you don't have to have, but they go ahead and get in the market and sell them. And imagine these $500 PlayStations end up costing $1,500. Yeah, that's a great plan for failure. You know, that's kind of crazy. What are some of your other? Is there anything else in this rent-own furniture thing you can think of as you know, other than don't even pay attention to them? What other thoughts do you have that you could add into these?
So, I think the other thing about I think the other thing about rent to own furniture and like avoiding it, again, you don't need it. A lot of those things are needs, not wants. Also, there are used appliance places around.
This is true.
Honestly, and a lot of the newer appliances, they don't have the longevity that older appliances do. So that brand new refrigerator that you bought or rent to owned, by the time you pay it off, it may not even work anymore. So there you have to think of those risks of some things that are newer aren't as great. You're going to be paying three up to three times as much for that same thing. Maybe like Cullen said, consider Facebook Marketplace, consider, local sales network style websites, or even the used appliance or furniture market, because there are used stores for both those things in almost every city. So
Yeah.
those are always options. You don't have to have brand new, especially if you're trying to financially recover or repay debt.
Yeah. And another great plan that dawned on me because I did this a number of years ago. With a decent credit score, 680. Remember, 680 is a B, 720 is an A plus. You walk in with a 720 credit score into Furniture Row or one of the big furniture stores, they are more than willing to get you 0% financing on what your purchase is, because just simply because you have a good credit score. Remember, rent-owned furniture is preying on people with 580 credit scores, 610 credit scores, because you aren't getting an offer of 0% interest at Furniture Row. But if you focus on the red flags, getting 720 credit ready, you walk in there. I remember I bought a sofa and a bed, and it was like $6,000 in total. Maybe not quite that. I think it was that and another thing, maybe 5, 6, where was it? 2 or 3 items, brand new, nice, etc. And I got 0% for 3 years. You do the math on that, it
Hey.
was like a $250, $300 payment, which is probably way less than you'd get for the rent-own furniture store. And I got a great quality mattress and a nice sofa. You got all the ones to choose from. It wasn't just the 3 they have there to choose from. And I was able to pay it over the course of time, no extra cost, and it still has value to me at the end of the day. You know,
Mhm.
so there's even a place, Big Lots. I bought something at Big Lots in Cookville. I bought a bed there because we needed an extra bed, and did the same thing. It's a zero interest. You could do it for whatever it was, and it was only, $60 a month, and then 6 months, I think thing was paid off. It wasn't that much. So
Right.
those are simple options, and just focusing on having that good credit, making sure when you do see an offer, the parameters around that and that it can fit into your budget. That way there is no surprise to you.
Mhm.
All right. Now we're going to talk about two more predatory lenders. The first is going to be payday loans. Then we're going to talk about buy here, pay here car dealers. Okay. Payday loans, if you have not seen one, is a little store. Sometimes it's a strip mall, sometimes a little old Taco Bell, or so just all kinds of random places. They're brick and mortar places that will give you an advance on your next paycheck. Number one reasons people use these services is one, their paychecks are not coming in before the rent is due or a utility bill is due, and they don't want to get cut off, so they're going to borrow against it. The bad news is these things are very high interest and they're very much predatory. We're talking it could be in the hundreds of percent interest for a short-term loan as little as 2 weeks. The good news is that I have heard over the last year or two that a number of payday loan stores have been closing down across the country. Ooh, that is an awesome piece of news. Why is that? What's the trigger that caused that in our economy? Not making more money in significant amounts. People still living paycheck to paycheck, but we've got these new, what they call online banks or neo banks that they call them, things like Chime and Vero and Dave. And because they don't have these crazy expenses of running brick and mortar retail bank locations, they're all virtual online and an app through your phone. They're able to give you other benefits. Things like no overdraft fees if you happen to go over your checking account when you're buying groceries at the store and it's $10 more. They allow a buffer in there because they already have you set up for direct deposit. They know the money's coming in. They also will give you an advance on your next paycheck. I think some of them will do it even up to, some do to $200, some do it up to $500. That's huge. That keeps, and they do it at no interest. Your money's going to be there in a few days. They know it's going to be there in a few days. So there's no interest involved with this. So you can go down to the predatory payday loan store, which is the real reason I believe why they are closing down in a vast amount of numbers, which is great because they're the free market's taking care of it. We didn't have to rely on the government to try and regulate them out of business because they clearly they're the ones that let them in the first place, right? You know, we're just coming up with better solutions for that. So if you have ever been victim of having to use a payday loan store, or you think that that might be something that you would have to do in the future, you might want to consider having direct deposit set up with one of those online banks that don't charge you the overdraft fees, and they give you access to your money ahead of time. That's a great way to look at it. And there's also some payroll companies. The one I believe we use, Gusto at Kharma, gives you early access to a couple $100 of your pay before your paycheck comes as well. Those are all great solutions that are compounding to the impact of these other places going out of business. Fine. So let's clap to that one and just say that's definitely moving in the right direction in our society. Okay. Next, let's talk about buy here, pay here car dealers. What are those? It's an entire industry all around our country that encompasses these used car lots where you'll see a sign out front that says no credit, no problem, or no credito, no problemo. And they are used car lots that generally sell cars that are 8 years or 7 or 8 years old or older that they pick up at the auction house from other cars getting traded in at other dealers and stuff. And they bring them down to these lots and they will put a sign out there saying, $200 a month, whatever gets you to drive into that lot. That no credit, no problem is a big one, right? Because you probably had just been out at the Toyota shop and they said, sorry, you don't have a credit score. Can't get you a loan. Why? Because 1 out of 5 Americans doesn't even have a score. So you don't have established credit. What do? The last thing you do is go to the buy here, pay here dealer. So you should never go there for any reason at all because you're not going to end up in a good situation. You show up, there's a car in the lot, let's say it's $12,000. And the first thing you're going to ask is, well, Wendy, how much money do you have for a down payment? Well, I've got $1,000. Can you come up with $1,500? I think so. What about 2,000? Okay, I can do that. Okay, so now your $12,000 car is only $10,000 for a loan, and they're not going to get you a bank loan that's actually going to report and build your credit score. They're actually going to give you the loan from their own accounts, okay, from their own money. There's many reasons they do this. One, this $2,000 that you already put for the down payment, paid for probably half of the car's price that they paid for it at the auction house anyhow. So they only got $2,000 off the line, and they're going to work to get $10,000 more out of you over the course of the next 2 or 3 years at a high interest rate, of course, because, maybe 18, 20%, because you don't have credit. I'm sorry. So they say, Wendy, I'm sorry, you don't have credit, so your interest rate's a little bit higher. So your monthly payment's going to be $350 a month, but you can cover that, et cetera. And you drive off the lot, you're feeling pretty good because you got a ride. What is about to happen after that? Well, when you miss your first payment, you didn't probably read all the fine print in that document you signed. You were just having to get the keys and get that guy out of there and quick to your first payment was due. But after you miss one payment with one of these guys, a lot of them, after 3 days, have what do they call the things that will remotely turn off a car?
Yeah, gosh, it just left my brain. Disabling, the vehicle disabling switch or
Okay.
something like that.
They can literally turn off your car remotely because you missed the payment 3 days later, right? And if you haven't come in there within the next couple of days and made your payment, they'll actually send a tow truck out in the middle of the night and just jack that thing will get repoed right out of there because that's what's in the agreement that you signed. It turns out that 1 out of every 3 cars at the buy here, pay here lots get repossessed within 6 months of the purchase. And I think what Wendy has told me before that something about these cars, they come back and they just resell them. It's like rinse and repeat or something.
Yeah, basically sell that same car over and over again 2, 3, 4 times. And so they already assuming they've made their money off the second go around on that car. Well, oh yeah, they'll loan it to you and then yeah, no, they'll just resell the same thing over and over. There was actually a story on John Oliver where they had resold the same Kia Sorento like 7 or 8 times through buy here, pay here dealers and things like that. Oh no, there's a whole story. We have a great podcast episode going really deep into this, and there's a lot of dangers to it because you don't realize all the little things that happen from buy here, pay here's. Like you could be in the grocery store and go out to go load the groceries, and well, the minivan is gone. And there's no warranty on the vehicle. It could break down at the next stoplight.
Yeah.
And well, sold as is, buddy. So sorry.
Brutal. That's brutal. Well, for all of you that haven't seen it, season 1, episode 1 was about how to buy a car with no down payment. I think episode 3 is the buy here, pay here in the full length version of that episode. But number 1 is actually, I think, more important. Number 3 is to say, stay away from buy here, pay here, right? Number 1 is this is how you go buy a car. When you're buying it from a dealer, you go to the credit union, get your own. So we go listen to episode 1, no down payment, get your car, get a low rate, and not have to worry about the pitfalls of the predatory lenders to buy your pay here store. So stay away. Let's see some of those places go out of business, just like the payday loan stores. Because the reality is consumers saw a better solution and they've gone to it. Like the online banks, there are better solutions than the buy here, pay here store. Get a good credit score quickly and make sure you get a good loan in the process. Hey, folks, back talking about credit building. Today, we're talking about credit builder apps. 10 years ago, these did not exist. When we started running Kharma 12 years ago, adding rent to credit reports, this was a brand new space. And a few companies have come into the rent building space, which is great because it adds proof of legitimacy that this is really needed. Just like the online banks we talk about, this is something that we all need that can help us have a better life. So it's simple. You should get credit for everything, all your bills you pay, especially rent. It's your biggest monthly expense. But since then, in the last 5, 6, 7 years, there's been an explosion of credit builder apps in the marketplace. They have different names. You'll see them. Some of them are what's called credit builder loans, which is nothing new. They've been around in credit unions for 20, 30 years. And we have an episode on that if you watch about those specifically. But then there's these other apps that are encouraging you to pay $50 or $100 a month to have access to a line of credit, kind of like an authorized user almost showing up on your credit report. But they're charging this exorbitant monthly fees for this. And the problem with it is is that those services, unlike you getting grandma to add you as an authorized user to her old JCPenney credit card, these things show up on your credit report with no past history. They're all brand new accounts. And people see these things and they're like, oh, wow, this isn't their site. My score's going to go up 85 points in 3 weeks. What they're not telling you is these are extreme examples of what happened to people. And they're not telling me the averages and the total real numbers behind this. And there's also the fact that whenever you open up a new account, whether it's a credit overdraft, a car loan, a personal loan, whatever those, a credit card, whatever it is, those show up the next month as a brand new account in your credit report. Think about it when we got our driver's license and our car insurance. The first month you went driving, you're like, wow, that's really expensive for car insurance. Why is that? Because you have no driving record. So the system sees it as these new accounts and says, oh, let's pause back. So your score actually will go down initially, and 15, 20 points for one new account when you have, 4 or 5 open accounts. The crazy part of it is people go up and sign up for one of these services, and then all of a sudden they're getting marketed to through retargeting on the internet. There are other competitors. And now you're seeing another one, and you're like, man, I'm in the credit building with today. I'm going to get me another one of those. It's like, I'm going to go get a refill of the iced tea, whatever. Next thing you know, you got 3 or 4 brand new accounts, right? This is the equivalent of getting 3 or 4 speeding tickets within a month. Go up to the judge and ask for forgiveness for that. The judge is going to laugh. They're going to be like, no, you should lose your license, if anything, right? This isn't a one-off mistake. This is a habit. Well, the credit system looks at it and says, oh my gosh, who needs 4 brand new accounts within a 1-month period? It was built this way back in the 70s and 80s, right? And it looks at it and says, they must be desperate. They must be needing to live off of credit. They must have lost a job. How are they going to pay this back? So the system will flag it. And that person has 4 brand new accounts. Even if they haven't missed a payment or maxed out a card or anything, their score can go down 80 points. And it won't bounce back for 6 months to a year until there's a lot of positive payment history on all these brand new accounts. And I empathize with people that do this because they simply didn't know, Wendy. They just didn't know, and they didn't know the red flags of credit, and they didn't realize that this would do that. They went there with the good intention of, I'm going to spend a lot of money to get a better credit score. Okay? And they get a little bit, and they see the second and the third, and next thing you know, they got a few of them, and it's just a backwards progress. And when I do one-on-ones with members, I tell you, so often I see this happen. Probably 1 out of every 7 or 8 people have just had 2 or 3, 4 brand new accounts in the last couple of months. I tell them, I've never recommended one of these apps. There's only one use case for these, and I'll tell you what it is. And 2, I tell them to just go and close them and take that money they're paying for the monthly fee, get in a high yield savings. If they have any credit card bills left open, just pay those off. Most of these folks only have a few $100s in credit card bills anyhow. We're not talking huge amounts of money. And when I go through that and I explain it to them, they have the aha moment and they realized it. And they instantly go, I'm going to close these today. They just didn't have the understanding. The only situation where I would even recommend one of these, and I only think a credit builder app that's like the ones that we're using, is I would recommend a credit builder loan to someone that is maybe 18 or 19 years old and they're just getting brand new into credit for the very first time. And then they don't have a goal of buying a house in the next year. They're just starting off the journey. It can make a little bit of sense in those situations. Stay away from these things, guys. It is not what it's not what it's meant to be, or it's not as it's marketed. Let's just say that. They're not telling you the pitfalls of it. They're only showing you the highlights of a handful of individuals. All right? So stay away, make your decisions. We all grew up with our parents having a checking account, and they had a bank. It was a lot of times in their local community. And a lot of those little ones that don't say the big names you see on TV are local community banks or credit. There's basically kind of 4 or 5 categories of banking. My least favorite is check cashing stores. It is a form of banking, not where you make a deposit, but just where you simply cash a check that somebody wrote you, maybe your paycheck. And those are for people that don't have a checking account anymore. They got put on the blacklist. They can't have one with the big banks, etc. And that's their kind of bank of last resort. Okay. The others that we have in our community, we have community credit unions, which are great. Those are nonprofit institutions that charge lower rates, and they're generally seen as very consumer friendly. And you also have community banks, which are very similar to credit unions, except they're not nonprofits, but they are very much community localized banks that are focused on their community. They do business ones in their community and things like that. And they might not have a whole bunch of branches. Most of them usually have 5 or 10 around the state or wherever they're in. And then you got the big banks. And those are the ones we all see on TV. You see other names on stadiums and football fields and all kinds of different things. And those are the ones that they also have. The last one is online banks, which is a new thing that we haven't really had in the past. The last 10 years, it just sort of started, maybe the last 8 years. And those, you might hear, there's names like Chime and Vero and Dave and some other ones out there. These guys don't have localized locations, okay? Whereas all the big branches, the credit unions and the community banks, they have a place you can walk in and talk to a teller or walk in and talk to the loan officer, et cetera. What's the main difference between these different organizations? Well, the big banks for years have been building a lot of their profits off of fees to consumers. You have to hold a certain amount of money in your checking account, otherwise there's a $5 or $10 monthly fee. If you go and overdraft your checking account, they will hit you with a $35 NSF non-sufficient funds fee, right? And various other fees that they have as well. The thing that I very much dislike about the fee model is if I have a credit card with that same big bank and I have hit the maximum on my credit card of, say, a $500 limit, and I go to check out at the grocery store, my card is going to get declined, right? No fee or anything to me, but it's going to get declined. I have to find another form of payment. I pull out cash or whatever I do. But if I use a debit card for my checking account for that same company, that same big bank, they will let that go through, not give me notification of any kind that I'm going to be overdraft. And I don't find out until the next day or two when I go and check my checking account and I see that I'm overdraft $35 fee. I believe it was 3 years ago, the big bank stayed somewhere north of $10 billion a year in NSF fees. Ding, ding, ding. Along comes these online banks and says, we're not going to do any of that. And people started rushing in groves to them. And I want to say the last 8 years, 25 plus million Americans have switched from brick and mortar to the online, no brick and mortar option.
I can believe it.
Yeah, no overdraft fees, get good notifications, technology's keeping you informed of where you're at. You can pull up your app and see right where you are. You got all the details right there at your fingertips. And they have become incredibly popular. Oh, what's the downside you would think of an online bank? You can't go in and talk to the teller, and they don't have a loan officer that you can't walk in and say, I need a car loan. Okay. But what if I have cash in my pocket and I need to deposit in my checking account? Smartphones are pretty smart, but they can't take cash in my smartphone yet and put it in my checking account, right? You can take a picture of a check and deposit it, but you can't do it with cash, right? That'll be a neat day to see when that happens, by the way. I'm not sure what they'll do. They'll make you like burn up the money after you insert it or something. I don't know. But which is the federal crime, by the way. But what you can do is they actually set up, and very smart, they went and set up relationships with like the pharmacy chains, the big ones. You see on every street corner. You can walk into one of those with $500 cash, $1,000 cash in your pocket, and you go in, they'll scan your app, and you give them the cash. And within seconds, your app will show this cash deposit directly into your account. Pretty cool. It really overcomes a big problem, even though we're becoming less the cash society. It really does. Then if you go back to, we talk about community banks and the credit unions, They're still very much localized. And if you have a small business, those are great places to go get a relationship because they are the ones that give out loans for small business expansion or, real estate for small business and things like that. You can't really rely on the big banks for those things nearly as much because a lot of times the big banks don't even have a physical location in a lot of rural South America. I've lived in a number of small towns and, there was never the big fancy damn bank in town. It was always the community banks and the credit. And that's definitely a good place to go and start for that. So I hope this helps lay a picture of that out and what to look out for. Because one thing out there, many of you have probably never heard of the blacklist for the banks. Okay? There's a company that came around years ago called Check Systems. Okay? The big banks actually started this company on their own. What I heard the story was it was a joint venture between a bunch of the big banks. They basically started a database that they share of anyone who has ever had a checking account closed on them with a negative balance. $100, $200. They never let you get to $1,000 negative. It's only a few $100, okay? Because they can close the door with the flip of a switch. But as soon as somebody has that account and they don't come back and pay it, which is, I'd say 90% of the time, because of this $10 billion in NSF fees that they've been hit with, that's what caused people to get on this list in the first place. So they'll actually submit your name and date of birth and social and everything else to this system called Check Systems. So if you ever then had an account closed at one big bank and you went down the street to another one, even 5 years later, I think you stay on the list there 7 or 10 years. It's some crazy number, okay? If you want to apply for a checking account, they go in and check the Check Systems database. And if you're on it, I'm sorry, we can't give you an account. Okay? Can't get you a checking account. Which is kind of crazy because all they need to do is freeze the ATM thing at the first place that you can't even overdraft your account. But first, stop me from even just give me more information so I don't have to do the overdraft, right? It's crazy. Thankfully, if you are on that list, that's a lot of the people I can tell you, the 25 million people going on the online banks, but you them were on that Check Systems list. Because they found out they can actually have a checking account that wants to be predatory. Make sure you make good decisions. If you do need those different, just make sure you take each one into consideration, look at the pros and cons, and go from there. So hope you all have a great day and go to the learning center, get some clinic card ready. Make sure you know how to stay there because once you're there, you do not want to go back. See y'all.
Thanks again for joining us for another episode of Rental Karma on Air. Be sure to leave us a voice note for any questions, comments, or stories about this or any other topic. Send them over to Cullen at rentalkarma.com. Also, don't forget to like and subscribe the Rental Karma channel here on YouTube. Just hit that button below, and we look forward to hearing from you next week.